My name is Nick B, and let's get into this week's futures overview. So, starting with the Forex economic calendar, Monday we have final manufacturing PMI, ISM manufacturing PMI. Those are going to be important. Tuesday, JOLTS job openings at 10 a.m. Wednesday, ADP non-farm employment change, as well as ISM services PMI. Thursday, unemployment claims, and Friday, NFP. So it's going to be a pretty busy week. We've seen kind of the swings that we had in the last 2 weeks, the channel that we were kind of dancing in, and ultimately we did end up breaking down, but retraced most of that move into the end of last week. So as always, let's start with ES. Let's blow this up on the 2-year daily. Let's just take a look at what's been happening. So at the end of the day, what I look for is the simplicity. What's going to tell me price is going to go up, or what's going to tell me it's going to go down? On the big picture, because we're looking for trends. So I'll always plot off the all-time high, and then I'll go ahead and plot off this support right here at 49.63, because at the end of the day, there's no real change here in price action. Sure, there's swings of hundreds of points, but for us to get a continuation in trend, we either got to break below this floor or break out. Okay, so with that said, let me go ahead and also change up the color just so it stands out. Let's identify opportunities inside this floor. And we'll go ahead and break this down now to the 4-hour. Again, this stands out to me, but we need to take a closer look. All right, so it's a series of lower highs, lower lows, and we made higher highs, higher lows. And again, in hindsight, it's easier to tell now. We broke the first higher low, managed to squeeze below the second higher low on the intraday, and really bounced off of the third higher low. Okay, so right away, what I'm looking for is two lower highs that I know are going to break, and once they do break, we're for sure going to go somewhere. And the two lower highs that I see to my naked eye on the 4-hour are 53.38, 53.40, and then the highs at 53.68. So I know for a fact, again, it reinforces the for sure thing, the for sure trade above 53.68. We're looking at 5400 with a proper stop probably at 53.50, maybe light risk, because that breakout, it's gonna go. But if we cannot get above the high that we made on Friday of 53.05, most likely we might begin to retrace this move. And for me, the minute we blow out the higher lows, the lower lows of 52.20, really, that's going to give me the green light to come on and target the next support at 51.88. So at 51.88 is the next kind of reasonable place to execute a short for me, in my opinion, if we have to go short in this range. And the reason for that is if I short at 52.20, I am targeting 51.90 basically. So that's about 30 points to the downside. Where am I putting that stop? Where there's a feasible support at 52.65. That's about 45 points away. So I'm risking 45 points to possibly target 30 points to the downside, whereas once this level breaks, we have way more room to keep on going. Really, my target is going to be 50.35. Now we're going to have to come up on 51.55. We're going to have to come up on 5100. But there's a better risk to reward ratio in my mind here when we take a short at 51.88, or really 150, 51.90. You could take that short, and you put a nice stop at 52. You could do 52.20. You could do even 52.10, because even if we get to 52.10 by then, you know there's a possibility of more downside being invalidated. So as long as it doesn't tap up, okay, you're risking now 30 points to potentially target roughly 100, 120 points to the downside in case the spill continues to spill. Again, that does not necessarily mean that the overall trend is now, oh no, the market is bearish and it's all going to crash and come down. Not yet, not necessarily. And I say that because we identify the certainties on the higher time frame. Well, what I like to call certainties. And that is above 53.68, I know for a fact we're going to 5400. And then below 49.60, again, I know for a fact we're going to continue spilling over. Not only would we have blown out most of the higher lows on the 4 hour, which again would confirm an intraday trend reversal, but at the same time, you take out the low, the next feasible place to target is the previous higher low, and that would be in the areas of already 49.60, I mean, excuse me, 48.67. And really, I would say 4800 is a fair area if we really wanted to come down lower. The reason I say that is that would have been a clean 10% kind of retrace correction off of the previous highs. But again, things are different. And again, 4960, I mean, let's consider also kind of the macro side of things. I don't necessarily think things are really horrible just yet. I can't justify more downside. If anything, I think the economy's looking for some kind of alleviation towards it. Maybe that rate cut. I'm not necessarily hanging on to that rate cut to be kind of that golden goose that takes us a bit higher, but I don't have enough proof. I don't have enough evidence to convince me that, yes, this is the top. I go based off of confirmations. And again, we break down the neckline of this possible double top. I'm not ignorant to the fact this could be a double top. We break down the neckline. Again, that confirms more downside. Cool. I know where, I could be a little more confident with the setups. Because again, last week, we were going for the setups. And now, mind you, yes, we could have been shorting. We could have been shorting the rips. But the problem with that is that I have, at least personally, is why counter trend change? Why counter trend trade? Why go against the trend? I've been always taught and hung on to the philosophy that the trend is your friend. And every time I would go against it, it wouldn't necessarily always do me good unless it was momentum in that moment. And clearly last week, most of that jazz was momentum. We broke a few, supports. Yes, we flushed down, but at the same time, I think it was a very healthy retest of the squeeze that we had after, I believe this was FOMC week or CPI week, where we finally got out of this rut where this was a bear trap. So I think it's fair that if anything, we retested these areas. Now, as long as we hold that bottom line, that mid level 5188 on ES, we could see a potential recovery out of there. Do I want to time anything in between? Kind of, but is it worth it? Not really. I mean, again, considering with last week's setups and signals and the jabs that we were going for, we were looking for continuation, and it's very tough to find that continuation. Now, again, some people might be looking at this and going, well, it's an obvious short. I mean, we're making lower highs now, lower lows. We blew out two previous higher lows on the intraday. You got to take it short. Again, that's possible, but I'm looking for the probabilities that can protect my capital more so. Because if I can't find continuation in trend, the very thing I'm trading, why am I trading? Right? Because it's either the market goes up or it goes down, and we make money going long or going short. And then when it's sideways, well, that's when those odds begin to thin. And we got to be a little more conscious of what exactly are we risking our dollars for? At least that's how I think. With that said, I don't really even need to bring this down to the 1 hour. It would be a little bit of a waste of time because we identified as much of the major moves as we could have already on the 4 hour. If anything, the 1 hour reinforces what we need to blow out, what prepares a good risk to reward ratio for us. And that would be again the case. Get me below 51.88. We could take that short, with a nice slim stop at 52.15 or so. And we're targeting our first TP down would be 51.55. Below that 5100. And ultimately, to the naked eye, I'd really be paying attention to 50.37. Because if that breaks, well, it's game over. But let's see. Let's see how we do. We have a very busy fundamental week ahead, so we'll have to play it by ear, take it a day at a time. Now, moving on to NQ. Let's go ahead and blow this up. Same thing. 2-year daily. Just a habit. I know it serves me no purpose. But same thing with ES. What are our certainties? And before I actually move on to NQ, I want to talk about this. Oh, that's why I didn't talk about it. Okay, 1 second. Okay, right. This was the missing piece to the puzzle for the overview that I use, and that's my exponential moving averages. So I have my 20-day, my 50, my 100, and 200. That's it. That's all I need. All right. So let's reinforce some of the ideas that we've drawn up on the daily. Well, maybe that doesn't serve us really good right now. 1 second. Okay. Okay, so the 1 hour, I always pay attention mostly to where my 100-day EMA is. It tends to be a very strong support or resistance. If on the 1 hour we are above the 100-day EMA, most times there is strength in price action to continue higher. When we get below it on the 1 hour, most times price action tends to lead more to the downside. So we're above it right now. Okay, again, this is an indicator. At the end of the day, I need price action to confirm what we're going to do for direction. And then, oops, well, I'm getting carried away. And then if I blow this up to the daily, the one I pay attention to the most is my 20-day EMA. The 20-day lines up where our second previous higher low was, 52.65. It renders us a little bit useless as long as we are above it. If we continue breaking it down, it can serve us as resistance down the line. But if we hold above it on the daily, at least it's also confirming to me 52.70. Great. If we can hold above that, there could be an attempt to come up towards the highs. And that's going to fall into timing. Again, this would be the first lower high I'm looking at ES, and I'm looking at the second lower high on the intraday of 53.40. But when you are executing a setup in within these time frames in the moment, I can't say for now, but the first thing you have to think about is I know this is not a certainty because this is a range. So, is it worth my time and is it worth my money to take the setup now? If it is, if you can be on top of it, if you can ensure that you can inch that stop up aggressively to a minimum where you can take a loss, well, maybe at break even or take a few points, or if you feel that momentum is dying down, you could at least snag something, do it. But if it's a little bit of where you're not sure, you're hesitating, you see both scenarios playing out, wait for the first sure thing. Wait for 53.68 because you know if and when that gives, it's going to go to 5400. With that said, the 20-day on the daily confirms to me, well, at least in the intraday sense, this is support. And if we get below this 20-day again, well, maybe we can continue down towards the breakdown level of 51.88 and get below that, and we're shorting it to the 100-day, which is pretty a nice target at 50.96, 5100, where that previous higher low was. So that's a definite target. So this is what the EMAs confirm to me. I won't rely on them necessarily first because it's the price action that does the work. With that said, moving on to NQ now. Okay, so same thing, just like ES, I'm gonna map out the all-time high and I'm gonna map out this floor right here because I know below here we're definitely spilling over, above here we're going higher. Well, what about the thousands of points you're leaving on the table? Good, good point. Good point. Let's identify that. Well, okay. Now, the first thing also I do want to point out, because I have the EMAs up here first, 18,525, my daily 20-day EMA is what I used as my support, if you remember, on last week's futures overview. And I was leaning higher. I was leaning that, PCE can take us higher, but I was wrong. And the 20-day EMA 18,500, as kind of ludicrous as it sounded in the moment, was a feasible target, and we hit that. We even went a bit further and came down as low as 18,246. I think it was absolutely perfect because around those points, it retested all the resistance levels that we essentially squeezed out of last week. And since confirming that, you know, this just solidifies the area of supports. I know it sounds like I'm very permeable, but again, we're looking for probabilities that are going to lean in our favor. So what do we know for a fact here? Well, above 1923, most definitely we're going to be using round number theory, looking at 19.1, 19.2, all the way up to 19.5. Why 19.5? Well, personally, if I see on the daily that's the next target point, above anything else, most likely others see the same chart and may be targeting that number as long as we hold the supports of the breakout of 19,000, because we know NQ can and sometimes will move up to 250 to 450 points in a day. So with that said, let's take a closer look again. So 18,525, we're just going to keep that number in mind. We're not going to plot it just yet. All right. So same thing, broke out of the previous lower highs perfectly from 3 weeks ago. So climbed up to make new highs. And with this spill, what happened, similar to ES, I wouldn't even say we broke two higher lows on the intraday. It does look that way. But at the end of the day, for the last 2 weeks, price action has been bing bonging, between this zone until we finally got that breakdown. And even though we broke down, we're still holding above it as support. Okay, what's the next higher low? What are our previous higher lows? Well, we have one right here on the intraday, 18,400. That was our target to the downside if we got that break of 18.5. Again, it happened too quick. I was out for the day most of Friday, so we didn't really capitalize on that. Okay, I don't want to plot it just because we tagged it up. I want to plot the one that kind of sticks out to my eyes more. It would be this one right here at 18,164. I think if and when we do get a break of this level here, it's gonna get price action to probably make its way over down to 1876, which is major, coming down towards 17,984, and then slowly but surely could come down to 17,720 and then really make its way to 17,389. But that is such a fantasy. Still, at this point, I still think that's a fantasy. The reason I say that is because I don't see enough data or news or even the price action itself. I don't see enough support to where I can justify, oh yes, this is the top. This is where it's all gonna come down. I can't. Not yet. For me, that certainty is break the neckline. Yes, I'll make an opportunity out of the intraday breakdowns of the higher lows, and if there's a reasonable risk to reward ratio, cool. I'll go for it. I'll short it. I have no problem doing that. But if I know I'm in a range, if I know it's either or for the next real direction up or down, because that's where we make money, what am I doing here? Opportunity. Well, opportunity cost. Okay, fair. So let's look at the opportunity cost. This was a reasonable setup here when we broke below 18,545, and you could have targeted first TP 18,400 all the way down to even 18,2. Well, you would have seen this dying down here and probably exited if you were quick with it, and you might have went long again back to the upside. Again, that was a really quick but a very nice move. The point, what I'm trying to say is this was a nice risk to reward ratio breakdown. But again, we're above that floor support, so I don't trust it. The next decent breakdown where, okay, you can risk a little bit of butter, to make some bread, I would say is right here at 17,984. It was a previous higher low. It was a previous lower high. I mean, there's some history here, and it served as a pretty good resistance level when we were forming, the bear trap back before Fed. Okay, so I would take a short all day, 17,984. My target would be 17,721. That's what we're targeting, 200 points to the downside almost. And I would put that stop at really 18,000. You could put it at 1850. That's a fair setup there. So if I was to short again, you might be thinking, well, you're leaving so many points on the table. I understand, but that's not something I can really cover on the overview because it happens in the moment. What I can say is what I can look for and identify is the most reasonable playthroughs to take on because the rest is baloney. I won't lie, and this is gambling, what we do. This is nothing short of gambling. At least let's increase those probabilities in our favor. At least let's, do it in a way where we know what's what. Uh, so with that said, to the downside, what I'd feel more comfortable doing is shorting below 17,984. That's reasonable. Here, you see how it's all spread out? I can't even pinpoint what it might do. Again, I just have a different approach than others. Now, on the 1 hour, on the intraday, if I really wanted to take on, an upside play, because I know somebody is bullish on GAR, but if I really wanted to do that where at least I'm more comfortable, take me to 18,785. Not even, you know what? Take me to 18,8. We're going to put that stop fairly at 18,750. And then your target is above 18.8. You're really targeting 18.9, 18.880, 18.9. Above that, you're retracing up to 18.960, 950. Get above 18.960, you're going to 19.23. And again, above 19.23, at least on the 1 hour, the first thing I'm looking at is 18.1. So that would be a fair first TP to the upside. Again, if you're doing the break of the second lower high on the intraday, which is going to be 18.8, that's the fair level. You need to be on top of it. You need to make sure that stop is trailing right behind. And if you see any hiccup, and I mean any, like on the 5 minute where there's a slowdown or starting to buffer, get out. Just take profits. Because at the same time, I say that also because on last week's setups, the first one ran 60 points, the second one ran 40 points, the other one ran 30 points, another 40 points, and we didn't grab them. We didn't take a L. The one we took for break even, the other one we took for 10 points. But what it's made me realize is because we're in this range and let's say the setup goes and it starts to slow down, you're better off just taking the points rather than looking for continuation because again, the continuation is going to come either above 1923 or below 17,113 because that is the factual floor that we're in. That's how I perceive this at least, or how I approach the charts here. With that said, that is all she wrote. I mean, let's take a look at the VIX really quick. The VIX, yes, I'm on the 1 minute, but the VIX just completely, it wasn't even a sharp enough spike to really scare anyone. So that was a confusing pullback on Friday. And then the VIX just fell back off and we're back in tame territory of 13. So let's keep an eye on that. And the other one is the dollar. The dollar, preferably, we want it below 105, preferably. So it's been stuttering around here a bit, slightly right below 105. Please stay below 105 and get us below, once we see a breach of 104.30, I'm going to go ahead and place an alert there. It's good night, Irene, and then equities can get a shot at getting some footing to go higher. With that said, that's all she wrote. Have a solid and a great trading week ahead, and we'll see you on the next one. Cheers.